FX Nation, what's up, guys? Welcome back to ForexU in the advanced course, and welcome back to Market Maker Trap Moves Part 3. So, guys, as we continue this advanced course and this Part 3, we're still talking about Market Maker Trap Moves because the Market Maker Trap Moves, guys, there's so many different ones, but once you understand the behavior that they do, the game is over. All right, so as we continue, of course, we're talking about the trap candle patterns, we're talking about the dealer structures, and we're dealing about market maker behaviors. Because at the end of the day, guys, if you can identify and know what the market maker behaviors are, you got them. It allows you to do what? It allows you to trade in line with them. It allows you to basically get into trades super early because you know exactly what they are doing because you're thinking like a market maker, not a retail trader. All right. So let's go ahead and move forward as we continue on this series of market maker trap moves. So what are we talking about today? We're talking about star patterns. All right. So let's talk about star patterns. So first things first, let's talk about the definition of a star pattern. So that is, it's simply an extra 15 minutes for the market maker to take your money. That's my definition of a star pattern, literally, because you have, consider it like a railroad track basically with an extra 15 minutes on top of that. It's just an extra 15 minutes in the middle for those bastards to take your money. That's all it is, right? So think of it as, like I just said, a railroad track with an extra 15 minutes in the middle. That's literally what it is, right? When you really look at it. So we're going to talk about these star patterns, and we're going to talk about, what's a good star pattern, what's a bad star pattern. Because one thing that you need to know is that they help you create the high and the low of the day most of the time. And also, not all star patterns are created equal. Right? So I'm going to show you some good examples and some bad examples. And so this is why I always talk about now just making sure that if you're going to use these type of patterns as the market maker's trap moves, to make sure that you still use them on a second leg, right? Second leg M or W. Try not to do this on a first leg. Yes, you'll miss some trades. Yes, there'll be opportunities like this, but chances are, man, so much better when you take them on a second leg because you have that confirmation. All right. Well, let's talk about some of these patterns here. Let's talk about some of these star patterns that are good, some of these patterns that are bad. All right. So let's take a look at some examples here. So first one here, very important. What are we looking at? Price moves all the way down. This is actually a type 3 setup here. As you can see from the top, goes to the bottom of the range, comes right back to the middle of the range. Look, here's a star pattern right here to go down, right? Here is a star pattern, second leg, going back up into the New York session. Notice how it's at the very end of the box here, right? So that's a good star pattern, second leg of the W here. This is the ones that I'm talking about here. First leg, or not even a first leg, but just by themselves, right? There's a couple things that you have to take into account for this to actually work. All right. Number one is that, yes, it moved down from the bottom, from the top of the range to the bottom, and then from the bottom back up to the middle of the range, right? Now, what are the factors here essentially that could take you to saying, yes, this is a possibly good star pattern to take on this particular trade? Okay, couple things that I see. Number one is that it's a type 3 pattern, so you have the pattern. Number two is that the second leg is inside of the box by literally 3 o'clock. And then number four is the fact that you have the EMA, the 200 EMA, along with the 800 EMA here, pushing price down, right? And this is something, guys, that you'll see all the time, over and over and over again. All right, look how the EMAs are basically pushing price down. So whenever you see this occur, and you see a type 3 pattern, you have a couple things. You have the EMAs that are pushing price down. That's one. You have a correct type 3 pattern, which is coming down first, coming back up, getting stuck. And then you have the star pattern itself formed right here. And then the rest is history. And then what happens? You get a reversal, New York session, second leg W, another star pattern, and boom. You take that up to where? Guess where? The good old 50. Right? So that is a classic example of a star pattern right there. So just notice how the different aspects basically of come together for you to be able to take a trade like that. Right? So just keep that in mind. The more evidence you have, the stronger it's going to be for you to take that trade. Now this one, remember I said not all star patterns are created equal? Here you go. Here's an example of one. All right, what do we have? We have basically push straight up. This is actually type 3 pattern because look what happens. We have a 24 pip Asian range, right? Price moves from the bottom to the top of the range, comes back, and what happens? Railroad tracks right here and goes up. Now, check this out. Like what we just discussed about what different type of aspects would cause this to go straight up like this and for you to actually take a trade. Well, you're looking at what? A good type 3 pattern because it came from the bottom to the top, back down to the middle, and got rejected. That's one, right? So you have the pattern itself. The two, the timing, right? Is it inside of the box? Yes, it's inside of the box. The timing is correct. 3, the good old 50 EMA. Again, what is it doing? It's pinning to the 50. Again, price is pushing, the EMAs are pushing price up, right? So there you go. There's your trade right there. This is not a trade. Why? Does it look like a star pattern? Yeah, it looks like a star pattern, right? Got a big fat candle, a little guy in the middle, and a big fat candle coming back down. But what's the problem? The timing is not correct. You see that? It's outside of the box, so the timing is not there. Automatically scratch. Remember the most important things about these patterns is the pattern itself, the timing of where it happens, and then where you are in the cycle. Right? So when you have the pattern, you don't have the timing, you can't take the trade. If you have the pattern, the timing, and the cycle, it's all there. So here's an example of a bad star pattern. Not all star patterns are created equal. This is why. Here's one. So we have what? A type 2 pattern, right? We have a 29 pip Asian range here. We have price that hits the top. It automatically drops. Okay. Drops down, gives us a star pattern here as a type 2. And then you take it back up. See that? So good star pattern right there. This one here is another pattern. We have basically type 2 set up from London box going all the way down. You get to the start of the US session. What do we get? We get a star pattern right here at the beginning of the US session. And then it goes all the way up about 50 pips. This one here, what happens? Goes all the way up. Remember, 12 pip Asian range. So what are we looking for? We're looking for what? A type 1 pattern, right? So here is a nice, huge star pattern. Do you take that as a trade? No, you don't take that as a trade. That's way too big. You're going to have an impossible stop loss on there, right? So that's a big no. You scratch yourself out on that. You don't take that. Okay? However, if you just wait If you don't get this set up, just wait. Look, US session, what happens? You get what? Railroad track right at the beginning of the US session. Right? Now, is it inside of the box? No, it's like literally on the edge right here of the box. Right? So can you wait an extra 2-3 candles? You can, yes, of course. Okay? And then look at this right here. Railroad tracks right here at the end coming back up. You know that this is not going to be a good trade because the candles are too big. Okay, the candles are way too big to try to get into this stuff, just like it is here. So not all star patterns are created equal. If the candles are too big like that, it's just not worth getting into the trade. It's not worth it at all. Think about it, guys. Is it really worth getting into a trade like that? It's not. Okay? Even over here, all right, even over here and getting this trade, the only evidence that you have that this would be a good trade is that because the high is still holding. This is the high of yesterday right here. Why would they go all the way back up to yesterday's high? Think about that. That yellow line up here is yesterday's high. They went back up and tagged yesterday's high. Came back up here. What? They didn't need to go all the way back up there. They had so many people off of this candle by themselves already buying that they didn't need to come back all the way back up. And then from here, they just dropped. So first leg, second leg, and then come back down. Right? So this is literally about 30 pips. If you took a trade from here all the way down, it's about 30 pips. Okay? Take it to the 200 right here. That's the only viable trade that you have here, guys. Okay? Let's talk about this one here. So what does this one have? So we have a 15 pip Asian range here. You can see, look, 19 pip London range. Remember when I tell you guys, look, when it's moving sideways straight through London, what are you expecting? You're expecting the move to happen during the US session. What happens during the beginning of the US session? Here you go. False move, kick to the high. Look what happens, how this high is technically protected from what happened during London. See this? Look. You see that? This is all wick. Right? This is all wick. This is how they convince people to go up high and to buy so then they can do this and sell. You see that? So is the pattern in the box? Yes, it's in the box. So it's in the right timing. Pattern is right. You have evidence here because of what happened during London. If something different happened during London, then this would not have happened during the US session. All right? So keep it in mind, guys. Understand the behaviors. 15 pip Asian range, 19 pip London range. Straight movement accumulation sideways throughout 2 sessions. Trust yourself that something is going to happen during the US session. All right? Very important. Look what happened at the very bottom here. They threw a railroad track, right? Does that mean you trade it? No, you don't. It's at the end. It's a 104 pip move. What the hell are you going to trade? It's already moved its ADR for the day. Okay? Keep all that in the back of your mind, guys. All this every time that you see a railroad track don't mean that you have to take the trade. Okay? This railroad track here, okay, that some of you may have taken or could have taken, you don't take this. Why? Because the Asian range is 15 pips long. Asian range is only 15 pips. So it makes it impossible for you to see what's happening between these lines here. So that's what I'm saying, guys. You don't take this. All right? You take this. All right, let's talk about this one here. So what do we have? Basically have a move all the way down to the bottom, right? False move to the bottom here, And really what happened is essentially you get a W here. You get a W. Here's the first leg that happens during London. Then second leg comes back down. Another, what, I would say maybe 10 pips or so. And then goes back up and goes where? All the way back up to what? The 50. That's all you're going to get. About 20 pips. That's it. Here is a... here's a star pattern right here that's showing. Now, here's what I want you to notice about the star pattern, right? This first leg here is only maybe, and I mean maybe, 50% of this second candle here. So the question becomes, is that really a star pattern? Is that really a star pattern? No, it's not a star pattern. Okay? For this to be a good star pattern, you want this to be at least 75% of the big candle. Okay? So what's an actual star pattern? Look at this one here. Okay? This one is covering at least 75% of the big candle here. So this right here is a star pattern. Second leg star pattern, you take that trade and you take it up to the 50 EMA. Okay? So not all star patterns are created equal. What do star patterns create? Low of the day, high of the day. Right here. I mean, come on, guys. Do you see this stuff? This one. What do you see here? 16 pip Asian range. We have price moving up, down, down. Look what happens here. Look what happens. This is the behavior that you're looking for, right? Candle, star, another candle. Is this a star pattern? This is not a star pattern, guys. This is not a star pattern. Right here, look. This is only 50% of the candle. This candle only covers 50%. This is not a star pattern. Okay? If you want to call anything a star pattern, it'd be over here. First big, nice big candle, little star, nice big return candle there. Okay? Now let's say you took this as a type 3 setup. You probably would have been what? Stopped out because of this push back down here. Okay? Now, whether or not you actually should have put, let's say, your stop loss down here is another question, because remember the Asian range is only 16 pips. So theoretically, you should only be worrying about trying to find what? A type 1 pattern, right? So in reality, this whole setup here, you probably should not have traded anyways, because it's just not what you're looking for. Too many different guesses here that could happen. We're not in the guessing game. There's way too many other pairs to have possible setups than to worry about this kind of setup. It just doesn't make sense for you to spend any time on this type of a setup when there's so many other pairs that you can trade to potentially look for setups. It just doesn't make sense. Look at this one. So, what do we have here? 34 pip Asian range. Movement sideways pretty much throughout London. 27 pip range here. What happens, of course, the move is going to happen when? During the New York session. What do you get? You get a star pattern here, goes all the way up to the 200. So basically you're looking at one leg here, comes up to the middle of the range, comes back down, second leg, star pattern here, take that right back up. This goes up to the 200 EMA, 32 pips, Now look what happens at the very top here. It kicks out another star pattern. All star patterns are created equal, right? There's no interest at all in you taking any kind of a trade here. It just doesn't make any sense, right? Think about it. It doesn't make any sense. What the hell are you going to take a trade here for? No, you're not. Do you understand what I'm saying? Like, this is just common sense, right? But I just want you to see, like, that star patterns happen all the time, right? It just doesn't happen only on the second leg or anything like that. This crap happens all the time. It pops up all the time. So you can't ignore the fact that it's just going to happen at times. Now, the two bad examples that I showed you earlier about star patterns, they both had this pattern right here, right? Where the middle section here had a long wick down in the middle instead of being all the way up, right? You see how this one has basically the wick down, right? So it looks like a star, and this one has the actual wick down in the middle in between the two bars. Notice how the other one did the same thing also. Okay. Now you know. All right, this one here, what do we have? We have a straight stop hunt move straight up the whole London session. Came back, created the apex. Boom, here's your star pattern right here. Second leg M, straight down. 30 pips all day long. First leg, second leg, star pattern on the second leg, straight down. All right? Very simple. Let's talk about railroad tracks. Oh, the railroad tracks. So simply a 30-minute structure that allows market makers to hit the stops and shift the zone, right? You get one candle straight up, 15 minutes, another candle straight back down, another 15 minutes, right? So 30 minutes of structure that allows market makers to hit the stops, induce traders to take positions, and then take the zone away from them. They also do the same thing, create the high and the low of the day in one move. So the true railroad tracks that you want are doing what? Are creating the high and the low of the day. Not all railroad tracks are created equal. As I showed you already previously before, they're not all created equal, right? So let's take a look at some railroad tracks. So what do we have here? Railroad tracks. So here, move out of Asia, 17 pip Asian range. We straight move down and then straight move up again. Question. Does this candle cover 75% of the next candle? Does it or does it not? The answer is no, it doesn't. That's one thing against it. Two things against it is that the second candle is huge, so where the hell is your stop loss going to be? 30 pips out? I don't think so. That's too much. It doesn't make sense. So what do? You just go ahead and wait for the U.S. session. What do you get during the U.S. session? Oh my God, you get another one. This is a good railroad track. You can take that back up as a continuation trade for what happened during the U.S. session, or what happened during the London session, right? London session moves straight up, retracement. Whoa, where did they come to? Oh my God, what a surprise. They come to the middle of the range, and then they go back up. Holy smokes. It's a miracle. Come on. Do you see what I mean? Here's one right here. 26 pip Asian range. What happens? Moves straight out of the middle, straight down, then whoop, straight back up. Is this the low of the day? Yes. Is it in the box? Yes. Is the pattern good? Yes. So there you go. There's a good railroad track. In the box, creating the low of the day. Okay. Here's another one. We literally like just talked about. This is almost like very similar to the other one, right? The problem with this is that you're not gonna get a good stop loss. You're not gonna get a good stop loss on here. This candle by itself is probably a good 25 pips, right? So you're gonna be way out on your stop loss. So that's okay. What happens during the U.S. Session? Look, you had a straight up move, come back down. Are you in the top? No. You're in the bottom? No. You're in the middle. What are you gonna do? Continuation trade, right? Continuation trade. 44 pip box here for the New York session. Got well over 30 pips. Easy. It's actually over 50 pips if you include what's outside of the box, right? So remember, guys, that not all railroad tracks are created equal. Let's take a look at this one. So Asian range here, 36 pips. What happens? We move straight outside of the box here, come back, go back up, retest that high again, take it out, railroad track, straight down, 80 pips. See that? Second leg M, straight down. Okay. Second leg M, straight down. First leg here, second leg, railroad track, straight down. Here again, what do we have? 29 pip Asian range. We go out of the Asian range, we move out, we kick out from the 200 here. We go all the way back up. What do? We create the high of the day right here. We spike it. Boom. 30-minute structure right here, and we go straight back down again. You can call this the first leg. This may be coming back down and back up on this move here. Could be the second leg here. Regardless, that big, humongous spike up here, okay, this is at least a 20-25 pip spike up here because this box is 90 pips big. Okay? So, again, guys, you got to understand the behaviors that they're doing. I'm telling you, the behaviors, if you can study the behaviors, it's ridiculous what you'll know and how you'll trade much more differently and much more accurately. All right? So, move straight down to the 200, straight up. Here's your false move here. And then, of course, there's your spike, railroad track, boom, drop. Well over 100 pips in one session. This one here, same thing. Look, 20 pip range, goes straight up, hits what? 200 EMA, also hits what? Yesterday's high of the day. You got two different things there. Railroad track, right in the middle, right in the inside of the box there. And then, bloop, drop. I mean, come on. It's all in understanding the behaviors that they like to do. But there you go. There's another good example. All right, so here's another one. So 15 pip Asian range. So what are we looking for? Essentially, we're looking for what? Type 1, right? 15 pip Asian range. So let this go up here, sets, comes back up. What happens? We're about to go outside of the box, right? If you take this trade right here at the edge of the box, okay, 1, 2, 3, 4, 5, 6 candles in. 1, 2, 3, 4, 5, 6. This is the sixth candle. After this sixth candle, you got to start asking yourself, am I in significant profit? Right? If you're not in significant profit, what do? You take yourself out of the trade. So here you scratch out profit, 2 pips, whatever. and just get out of the trade because you're not at the high of the day. All right. This basically just turns into a big continuation trade. See that? Move up, retrace, hits the 50, comes back up. This one here goes up, first leg, hits what? 200 EMA, does nothing the rest of the London session but moves sideways. Guess what? Let's go back up and hit it again. Hits the 200 again, railroad tracks straight down. That's at least 60 pips right there, straight down. Okay? So if you understand the behaviors, remember what I told you guys, 14 pip Asian range, 18 pip London range, you know the shit's coming in the US session. Just automatically. They hit it one time and they do nothing with it. They do nothing with it for that London session. Guess what? 18 pips, 14 pips. You know you still got like another, 80 some pips left. You know something's going to happen in the US session. You know they're setting that up for the US session. It's so obvious. And then you see this move up here, like this. Come on. It's the behavior that they do all the time. That's all they're doing. It's their own behavior. I mean, this one here is pretty simple, right? 21 pip range. So we can take a type 2. Goes straight up, straight down. Railroad tracks right here. And it's gone. 110 pips in one direction. Okay. By looking at the EMAs, this is probably coming off of a downtrend. And the previous day here, since this is Sunday, Monday, the previous day here, I bet you, is basically the low of the week. Oh, yeah, below the previous week. It's right here. Look. See? So this is just basically them coming down and creating a multi-session W is what it is. Okay, so first leg would have been over here on Friday of the previous week. And second leg is here. There you go. All right. All right, so what's wrong with this picture? Can anybody identify what's wrong with this picture? Here's what I mean by not all railroad tracks are created equal. Here's one here. Here's another one here. There's another one there. There's another one there. It's just railroad track city, right? Look, all these railroad tracks. Oh, look, all these railroad tracks. Just back to back to back to back. Okay. Now, if you take this railroad track going up, thinking that this is possibly, let's say, a type 3, okay, understandable. All right, very understandable. All right, so let's say 1, 2, 3, 4, 5, 6. So what, you're 6 candles in, yes? About right here. All right, so what do you do after 6 candles, right? If you're not in substantial profit, what do? You take yourself out, right? So you take yourself out of the trade. Okay, you get, 1 or 2 pips out of it. Call it a day. If you take this one here, 1, 2, 3, 4, 5, 6. Are you in substantial profit? No, you're not. You would have been in substantial profit with these 2 fake outs here, but no, you're not. So you take yourself out of the trade. Again, a break-even trade. This one you're not even thinking about taking. There's no reason to take this one. If you think that this is going to basically continue to go up, I mean, you're taking out here again. So this is just complete manipulation right here this whole day. This whole day. Think about it. From the top to the bottom, it's only 30 pips. 36 pips max. From top to bottom the whole day they just ranged. Right? So not a good day at all to take trades there. But look how they set up. Just look how they set up though. That's what's important, is look how they set up. Because you're going to see this crap again. All right, guys. So those were star patterns, railroad tracks. All right. So I hope you learned a lot by watching these different examples and breaking down these different examples of what's a good railroad track versus a bad railroad track. All right. Remember that not all star patterns, not all railroad tracks are created equal. All right. Just because they put up a railroad track or a star pattern, you just don't take it blindly. You want to make sure that you have other factors in there that are telling you to take the trade. And remember, you don't have to take the trade. All right? So don't get coerced into taking a trade that you know you shouldn't be in. All right, guys? So in the next video, we'll finish up this market maker trap moves, guys. Thank you so much and have a great week.